Greetings and hello, everyone. Welcome to the second episode of HICAP 6x8 Recovery Top of Mind webcast series. My name is Jeff Higley. I'm president of the BHN Group, which oversees hotel investment conferences around the world. We continue to see a slow opening of various countries throughout Asia and around the globe, and we're hoping that we can see that expedited as time goes on. As these restrictions are eased and people begin moving about, there are more questions than ever about the state of the hotel industry. During the next hour or so, we'll explore what's going on in the industry with some of the sharpest minds around. But first, let's say thank you to our sponsor this morning. Quick message, warm welcome to First Finish, a sponsor of the 6x8 webcast. First Finish is a full-service general contractor specializing in the successful delivery of fast-track hospitality renovations across the United States and throughout the Caribbean. Please make sure to check out their services at firstfinish.net. Okay, so now on with the show. Today's webcast is called, as I said, HICAP 6x8 Recovery Top of Mind, Episode 2. It features six of the hotel industry's top minds from the Asia Pacific region and around the world. We'll have Peng of Pan Pacific Hotels, Alan Watts of Hilton, CIMB Group's Faez Jumabhoy, Robbert Vander Mas of Artyzen Hospitality Group, Ashurst John Stawyskyj, and Global Hotel Investment Group's Kevin Colket. Today's discussion will provide a unique perspective of the hotel industry's recovery in Asia and will undoubtedly touch on topics that resonate around the world. It will be fast-paced and time will go quickly. We'll be adhering closely to the 8-minute limit, and the speakers have been forewarned. So thank you for joining us, and now let's begin with the program. So let me do that first. And leading off for us is Peng, CEO of Pan Pacific Hotels. Peng has more than 30 years of experience in the global hospitality industry. Pan Pacific is a wholly owned hotel subsidiary of Singapore-listed UOL Group Limited and owns and or manages about 50 hotels, resorts, and service suites. Peng, good morning. Thank you for joining us.
Hi, morning, Jeff. Thank you so much.
Well, we're pleased to have you here, and let's just get right to the heart of the matter. What's on the top of your mind these days?
Well, Jeff, you'll be surprised. There are a lot of things that are top of my mind. So I guess I'll just rattle off. The first one, we're a small group, but we retention of 6,000 of our staff. That's the most important, that we think about. And to keep companies afloat during crisis, cash is king. I think, the management of cash flow, to have a positive cash flow can make or break a company. And once the debt moratorium, clears about 60 days, you could see actually a lot of issues, problems, especially with owning companies. So we set up a war room team made up of the best, just to go through scenario planning week after week, going through to make sure that we have the right financing done, the line of credits, as well as a positive cash flow. So that's one, keeping all our staff, keeping the cash afloat, companies afloat. We look at recovery. Recovery is, recovery is not easy. Can you imagine the moment Singapore example recovers, 50,000 hotel rooms will open at the same time. It's like, well, we're all going to open and everyone is clean room, safe room. That's a given. All right. But, at the end, what is it that will help us recover? I think it's got to be back to experience, got to be back to the value of a brand. We're keeping our powder dry, for renovation. The sponsor is First Finish. This is actually the best time to do major renovation, do a asset enhancement initiative. The contractors, they are hungry, they're looking for business, and we can work together. And so that's something that we're doing quite a bit, in all our properties all over the world, as well as restructuring. I feel that hotel industry is somehow a bit slow in adapting to changes. You know, can you imagine all the layers? You have the doorman, the bellman, the concierge, the receptionist, chief receptionist, the assistant manager, front office man, all combined to just one role. Why not? You know, so, and adopting of systems, we're re-looking at that. Hotel redesign. So we're a lot of things on the top of the mind.
That is a lot. I guess kind of the first follow-up question would be your portfolio in general. You know, there's a lot of different types of markets that you're in. How would you describe that portfolio right now? Are there any markets that are outperforming the others dramatically? How would you describe that?
Well, China was the first to sort of get hit. You know, way back in February, we had to close all our China properties. They took the hit, and it was quite bad. But you know, they're the first to recover. So 2 months ago, we opened all right now, except for Beijing because of the second wave. But they're all about 60–70% occupancy. You know, so the bounce back has been great, and I've been encouraged. But you know, from what I see is, countries with a bigger domestic market will probably come out better and first, right? China, they're not open to international travels yet, but within domestic corporates, domestic leisure, you know, we're packing them in. Australia has a big domestic market. We did our study. 90% of all our clientele is actually interstate travels. You know, but unfortunately, of course, Victoria. There's a second wave, they sort of shut down again. But, you know, I think once that issue is sort of settled, Australia will come out real strong. But Asia, US too, I think will bounce back of the big domestic market. But a lot of cities in Asia are domestic market, not that strong. I mean, Singapore, if we rely on staycation, basically it's just weekend. So we still depend on intra-regional travels. The sky's got to open. And I think Asia will recover, take a bit more time to recover.
That airlift is really, really important to the hotel industry, isn't it?
Absolutely.
How long, I know it's hard to put a time frame on that, but certainly it needs to come back for the hotel industry to thrive, right?
Absolutely. And, you know, like for instance, you know, we think that cities like Vietnam, Bangkok, Singapore, we depend so much on intra-regional travel, you know, domestic, no good. So even then, it will take probably the next 3 to 6 months. I don't think it's, you know, people be wary. And right now, most countries do, even if they open the skies, you have to, when you fly in, you've got to self-quarantine for 14 days. Who wants to do that? So we hope that not only lifting of the skies, but, you know, lifting of some of these measures, well, hopefully there'll be no second wave, no W recovery. But until we do that, I think it's going to be tough.
You mentioned a couple cities, Beijing or you know, Victoria and in Australia. How much does the second wave worry you as a hotelier? Are you preparing for that, or is it just more of let's see what happens?
I mean, we don't know. I mean, when this whole thing started, our recollection is SARS, and SARS had a V shape. You know, by May, June, it just, you know, came up. We were all prepared for that, you know, but, you know, right now, come June, we're still nowhere in sight. So a lot of people say it's a U, but it looks like now it's more of a W recovery. You know, you go up, you come down, you go up, and you come down again. So we just have to be prepared for, you know, example right now, Beijing, you know, we were doing like 50–60% occupancy Beijing. Right now it's about single digit, but the other cities are still doing very well. So, well, you know, I think there's a way to kind of lock down within cities. Victoria is kind of going back to lockdown, but, you know, Perth and Sydney and Adelaide and all, they're coming back up. So, well, we just have to ride those waves and see how.
What metrics or data points do you watch? Are there one or two that you watch that kind of will tell you that things are getting better? I mean, occupancy is obviously a key metric for you, but are there any data points within the industry or externally that you keep a close eye on?
Well, I tell you right now, I mean, we just had a session yesterday with all our general managers on revenue management, yield management, but I'm telling you right now, I'm looking at occupancies. I mean, because I mean, there's nothing out there. I mean, you know, it's not that, you know, we lower our rates or increase our rates, it's going to affect the market, the segmentation. International flights, you know, are not coming through. All right, and unless it's domestic and like US and Australia and China, but you know, anything probably that breathes and lives and has a wallet, will take them in. And you know, and we're thankful because a lot of our properties, you know, 9 in Singapore and quite a number in Australia, we're supported by the government with this isolation program where, you know, most of our hotels are actually 100%. I would rather have 100% occupancy with slightly lower rates than zero. So I'm going for occupancy, and that's what you know, revenue preservation is all about. We want to take them. Australia too, been helped by the government. They got a lot of returning Australians, isolation, quarantine. We're all, every morning when I look at the figures, we see 100%, 98%. I'm okay. I'm all right.
It's all about heads and beds, isn't it?
Absolutely.
So final question for you, Peng Sum, and we have, you know, roughly 30, 45 seconds. This is a question I'm going to ask everybody throughout this session. What will have the biggest influence on the hotel industry's recovery in the Asia Pacific region, and why?
Well, as I mentioned, you know, especially in Asia Pacific, you know, we need the skies to be open. We need confidence. We need, you know, people to stay. Let's start moving again. Let's you know, go back to what it was. And unless we see that it's not going to work. We think that all over the place, domestic travel will start first, and yes, domestic leisure, domestic corporates, and then finally the you know, international travel, and hopefully that will speed up. The last probably, I think, will be the huge big gatherings, and you know, we'll probably start with some hybrid there. We started virtual you know, wedding shows, and we've been getting a lot. I think they're going to be a pent up, but won't be till probably 2021.
Okay. Choe Peng Sum, thank you for your time this morning. We really appreciate your insight, and thanks for being with us. It's always a great pleasure catching up with you.
Thank you so much, Jeff. It's a pleasure.
Okay, have a good day. Okay, so let's keep moving on with the program. Next up is Alan Watts, who is President Asia Pacific for Hilton. He oversees the operations of more than 300 hotels across the region, as well as the company's pipeline of more than 500 projects. Alan joined Hilton in January of 2018, and with over 20 years of experience in the hospitality industry. Alan, welcome.
Hey, morning, Jeff.
Good morning to you. Let's jump right in. What's on the top of your mind, Alan?
Look, probably some similar themes, and no doubt as the conversation goes on today, we'll end up sort of all saying variations of the same thing. Look, I'll start with, for the last 24 hours, I've had a welcome distraction. We announced a partnership in China for over 1,000 new hotels with a company called Country Garden, which is the largest real estate developer in China. So I've been on the media circuit speaking about that, but you know, that's some respite in what continues to be the nuclear winter that is the COVID pandemic. Outside of that, you know, pretty similar themes than Peng Sum. You know, fixed versus variable labor in our hotels and in our corporate offices has been top of mind for the last couple of months as we prepare for what is going to be sort of peaks and troughs as the business gets back to normal. Pointing Hilton's engines domestically. I mean, we're a large player, which means we're a big ship to turn around. And again, as Peng Sum said, in the current phase, it's all going to be about domestic travel. And within Asia Pacific, you have those huge domestic markets. We've got a big business in China. We've got a big business in Japan. We've got a big business in India and a big business in Australasia. And those businesses can be domestically sufficient. And in fact, in some of those markets, if you look at China outbound, for example, 125 million trips last year, or Australia outbound, if the outbound traveler started to travel domestically and traveled at the same frequency, the hotels would not only be okay, they would thrive. In fact, in some markets like India and Australia, the outbound market is actually a direct offset, if not more, than the inbound market. So let's, you know, that's not necessarily things to be excited about, but it does mean that our hotels will be okay. Then other than that, what's top of mind is, and we'll come to it, I think, in the close, is cooperation between governments and, you know, the definition of safe travel and consistency. The fact that every country is interpreting what landing protocol is differently and what isolation is differently, or in fact, what COVID tests are differently, is driving our precious industry nuts, and it appears is going to for the next few months.
Great. Let's talk for a second about the development contract you signed. Now that's a lot of hotels in normal times, but in what would some people would say is the worst economic times of our lives, having an announcement like that, what does that actually mean for you? Is that over a 10-year process or a 10-year period, and how does that get done? When does it start?
So we've obviously been working on it for some time. It's based on the China Belt and Road, and, you know, the emergence of the tier 3, tier 4 cities that will become, you know, tier 3 will become tier 2, tier 4 will become tier 3. And so we've launched our Home to Suites brand, which is an extended stay product in China. And we realized that as China is developing, there is a lot of business parks, there's a lot of sort of micro communities and a lot of length of stay travel. And so we've been looking to capitalize on that and follow Belt and Road. It's a master license agreement, so Country Garden are managing with us or in partnership with us. And it's a milestone agreement. So every year there's a set number of milestones that the partner needs to hit, and then we co-manage the properties with them. If you look at it as to why now and why didn't we delay the announcement, I think two things. Number one, domestic China, as Peng said, is recovering. But number two, there's a lot of opportunists out there. And one thing that has happened at the moment is real estate has crashed and it's at an all-time low. So you do have a lot of investors on the sidelines looking to capitalize in a downturn. And if you think of the construction cycle, even in China, which is quicker than it is in most other markets, you've still got a 24, 36 month build time.
Okay, so last week there was an announcement of a different kind from corporate headquarters. You know, many changes at HQ with layoffs, staff reductions completely.
Yep.
How does that affect your region? What are your overall thoughts about that?
Look, I think like all businesses, we have tried to hold on to some extent to make sure that we know as much as we can possibly know before making bold and drastic changes. You want to make bold and drastic changes hopefully once. You want to get your business focused and refocused on the task at hand. But the reality for all of us is cash is king, and restarting our engines and inducing demand is important, and our owners are going to lean on us heavily for marketing spend. They're going to lean on us heavily for distribution. And we, like all other companies, are not going to be able to do that if the majority of our cash is tied up in labor costs. So we've taken a pretty dramatic step, and particularly in the variable function. So marketing spend is a good example. Sales spend is a good example, to take cost out of the business to be able to swing in behind our owners and induce demand in the best way that we know possible. And of course, as the system, as demand recovers, we'll end up re-recruiting that workforce. But at the moment, we don't have a liquidity issue that we were trying to solve for. So forward planning to get the best out of the recovery.
Okay. Starting from Chris Nassetta on down, the entire executive team, for the past, I would say, 10 years, you all kept using the term, we're in the golden age of travel. Now we've gone to one that's of uncertainty. From your perspective, what do you think the biggest change the hotel industry will see on a permanent basis going, from that lofty level to, the challenges that we face now? Is there anything that's going to come out of this that will be permanent, do you think?
I think as it relates to Asia Pacific, the macros are still the same. Youngest population in the world, 52% of the world's population, fastest rising middle class. If you think of the mega cities in China and India and below and beyond, and just how quickly people are heading urbanization and modernization and the demand for hotel rooms, I think that will remain a constant. We'll take a holiday from it to some extent, and construction timelines will get delayed because of COVID. I don't think it's going to have a permanent impact on the demand for the industry. What I do think is that build costs will change. I do think large meeting rooms will become not necessarily a thing of the past, but they will become different in design. I do think hybrid meetings where you have 100 people in the room as opposed to 500, and technology plays a huge factor. I do think we'll be designing our hotels with smaller amphitheaters in them, knowing that we're going to do things like this. There'll be TV cameras and we'll be live streaming to other participants. And I do think in the meeting and event space, it's going to change that model. It's going to change the way that people make monies from events like some that you do. So we need to make sure we design for that. And in many cases, we'll end up retrofitting for that.
Very good. Final question for you, Alan. We have about 30 seconds. What will have the biggest influence on the hotel industry's recovery in Asia Pacific region, and why?
Government cooperation. We need to ensure, and WTTC is doing a fair job of this, that safe travel has the same definition across border, and that the ASEAN economic countries can align on 1, 2, or 3 tests that they recognize from each other, because testing pre-flight needs to happen to give customers the sense of comfort to travel again. And the risk of you landing and testing with a different test for a different result and getting put in government isolation is too great. So at the moment, we're at essential travel only, even if the skies are clear. So to me, that's going to be the big cooperation will be the biggest factor in the next 12 months.
All right, very good. Alan Watts from Hilton, thank you so much for being part of the program today. We greatly appreciate you taking time out to share your insights.
Great to see you, Jeff. Thanks.
All right, take care. Bye-bye. Okay, let's move on to the next speaker today. We have Faez Jumabhoy. He's the managing director and head of real estate finance for CIMB. He covers investment advisory, debt financing, equity, debt restructuring and recovery, asset management, and property planning and development. It sounds like pretty much the gamut. Faez joined the company in 2011. Good morning, Faez. Thank you for being here.
Good morning, Jeff. Thank you. It's always a pleasure. Thank you very much.
My pleasure indeed. Let's jump right in as well. What's on the top of your mind?
I have 2 topics of mind. One is at night and one is my day job. And at night, I always think about unity, global peace, harmony, understanding. In the daytime, it's cash flow. We support a lot of real estate lending in the 10 ASEAN countries and in the United Kingdom. That's our footprint. So we're always keeping in touch with our clients, the cash flows, and how this pandemic is evolving, because it's very different from SARS and MERS, which we lived through. Asia Pacific also, the area that we have a lot of concentration in was growing at about 7%. So there was a lot of new money going into the hospitality industry, and all of a sudden the brakes started. We are 25% of global tourism arrivals and 30% of global tourism receipts, and pretty much is inbound. Europe was a large part of that, and Europe closed down pretty fast. So we are spending a lot of time with our clients in the region, making sure that they have, and we can provide them, sufficient sustenance to survive this pandemic and to keep as many people employed as we can in the region.
Are there any unique unique trends that you might be following in terms of tracking anything with your clients and the industry?
Apart from the financial metrics of capital values, we've back-tested capital values to what happened during SARS and MERS. We back-tested cash flows. We looked at how REITs have performed in the 2008-2009 downturn. I think we're all looking at, when this pandemic will end, when air travel will start again, because out of all the tourism receipts, about 60% of it comes from air travel. And Asia Pacific is not like Europe, where you can jump into a car and drive to your next destination. Pretty much you have to fly from Bangkok to Singapore, from Singapore to Beijing, Shanghai. So it's when we believe this will stop, we keep an eye on new COVID developments in the different countries. And in the meantime, we're looking at government support to keep the economy going in that interim period.
For people that are tuning in terms of dealing with banks, what are banks doing right now in terms of communicating and working with their clients? What should a client expect when they come to a bank? What to go through in this type of environment?
Well, I'm happy to say that our bank is a regional bank based headquartered out of Malaysia. I'm happy to say that a lot of banks like us were very proactive. Our governments were very proactive. Our governments came out and said, let's look at giving interest moratoriums. Let's look at giving principal moratoriums. Don't forget, all of the ASEAN countries went through a very, very drastic recession in 1998, 99 period. And we all had our respective resolution trust corporations. So Malaysia had done a HARTA, Thailand had FRA, Indonesia had IBRA. So it wasn't a shock to our system. It's just that we had to remember what we did in the past, and we had to accommodate for that going forward. So we had a lot of cooperation from the government and the banks to really look at our clients' portfolios, and in some cases actually come up with additional funding based on the security cover and the businesses that they're in to help them through this period. It's not easy to stop construction halfway through and walk away from a site.
What about the financing right now? I don't know if this is a silly question, but are loans available right now? Are you actually lending money? How is that working out there? Are there loans available?
I would say we're in a difficult situation. I would say a lot of the firms out there, a lot of the banks out there are looking at maintaining, supporting the existing clientele. But I guess 1 out of 10 or 2 out of 10 is a new request that we take it and look at very seriously. It's very tough right now, Jeff, because there is no cash flow out there for a lot of the hospitality industry. So we're looking at very strong parentage, corporate support, and also how that corporate support is structured.
And is that a process that takes a long time, or is it a pretty quick decision?
The yes/no decision is pretty quick because we I think the financial institutions here understand what they can and cannot do. Because the last thing they want to do is go into a restructuring, because that affects everybody and everything. But the processing is taking time, a little bit more time than normal, because the due diligence process of kicking the tires is just so much more rigorous. Not that it wasn't sufficient before, but there are additional hurdles that we go through.
Okay. Final question for you, Faez. Same question I've asked the other gentleman thus far is, what will have the biggest influence on the hotel industry's recovery in the Asia Pacific region, and why?
It's really air travel. We are a host of many countries. We get from one place to the other by air. So it's air travel and harmonizing air travel, as one of your guests earlier mentioned, between the different governments to make sure that the safety standards are met. People are feel empowered back again to travel, sit on the plane and travel. Air travel.
Well, very good. Faez, Jumabhoy, thank you for being part of the discussion today and adding insights from the banking perspective. Very, very valuable. Thank you for being here, Faez.
Thank you so much, Jeff, and to all those listening. Thank you very much. Appreciate it.
We'll see you soon. Okay, so we're halfway through today's program. Next up is Robbert Vander Mas from Artyzen Hospitality Group. He has over 30 years of hospitality experience, including 23 years with Hyatt Corporation and stints with Four Seasons and MGM. One of Robbert's specialties is opening hotels, having led the opening of the Grand Hyatt Bali, Hyatt Regency Osaka, let me turn that off, and 2 Four Seasons hotels in the Maldives. He joined Artyzen in 2013. So Robbert, good morning to you. Thank you for being here.
Morning, Jeff. Great to be here.
Question to you, what's on the top of your mind today?
Similar to my colleagues in the hotel industry, Peng, and Ellen, the first phase of the pandemic, we've concentrated on our employees, our guests, our owners. We extended that into the communities where we operate. But as a small company, a startup company, we have 5 hotels operating at this moment, and we will triple our size in the next 2.5 years. Our focus has obviously been on our survival as a company and the individual properties. And so far we've been fortunate in that the 2 hotels that we have in China picked up relatively quickly. Macau is still suffering because of the closure of the borders and the dependence on the mainland Chinese patronage. And our hotel in Hawaii, we coincided the breakout of the pandemic in the US with the start of our renovation. So we see a little bit of a silver lining there, that we would go through a lot of the dirty work and noisy work, in the phase that the hotel actually closed down. So after we were able to stabilize the hotels and similar to my colleagues, procuring the cash flows, focusing on the local expenditure and clientele, we focused on securing our pipeline. And all of our projects, especially the 7 opening that we have planned for next year, are all still in progress, and they're actually accelerating to make up for lost time. So what is on top of my mind really is the next phase, is the global economy and the different pace in the reoccurrences of the pandemic, the different pace in opening, early, late, which will set a very uneven battlefield for companies that need to depend on global travel. If it was all aligned, and it would be much easier. So I think the time factor that it will take for us to get a grip on our distribution, on our clientele, will take a little bit longer than the 6 to 10 months, which I heard earlier. I'm afraid that the intra-regional travel will probably take a little bit longer, and we're looking at maybe 1.5 to 2 years. What is encouraging is that there are certain bubbles being created. We talked about, there's information about the Australia-New Zealand bubble. There is a Guangdong, Macau, Hong Kong bubble, which is being considered, right? And that would be great for the Macau hotels. The China hotels will very much focus in the next 1.5 to 2 years on the domestic travel, which is great business. And we've seen also a very rapid pickup. We broke even in our China hotels as early as April. Right, so the main concern really for me is the time factor and how the global economy will further develop, right? So with that the growth of the middle class in Asia, Ellen already alluded to that. In our business plan, we looked at the growth of 400 million people being added into the middle class in China. Is this going to happen? Is this going to slow down? What effect will that have on travel in general? So I think for the next 2 years, our hotels will focus on the domestic travel and the bubbles where, they initially will open, and hopefully we can get the governments, the regions to align themselves. But I don't have high hopes because of the different phases of, the pandemic and recovery where the different, regions are.
Interesting. You mentioned a relatively new company, small portfolio now, growing. What words of wisdom or piece of advice would you give to other leaders of similar size companies during a time when it's the most difficult time in their careers, probably because of the lack of cash flow and the challenges faced? Any words of advice?
Well, what we've learned from from our opening, and again, being a startup, you often as a leader more entrepreneurial. You really wear multiple hats in an organization, and I think one of the big learnings for us was that our path that we set in about 4 years ago with restructuring the organization in the hotels through multi-skilling, multitasking, reducing the number of layers, in the hotel, that has really helped us a lot during this period. And we had, we've been fortunate not to have to terminate anybody at this moment, I think this is the trend forward. We will further develop this, and we also believe that technology, although an important factor, we cannot hide behind technology. We need to still groom leaders that are entrepreneurial, that can switch over, that can adapt to markets, that can adapt to customers, right? And the way that we have operated in these hotels has been very encouraging. And I think the key is to bring back the entrepreneurship in the property management of the hotels. I think one of the opportunities for us as a small company is that the recent consolidation that has taken place, where some operators have maybe 50, 60 hotels in one city in China. As a smaller niche operator, you may be able to be a little bit more focused on a specific property and present a proposition. So I see a little bit of a silver lining. And additionally, I think that the commodity style hotels, the functional hotels, will have to change and adapt more lifestyle, because the consumer, if they travel and where they travel, they're increasingly going to choose for experiences. And we are in that field. We are very happy in that. Our owners are excited about the concepts that we have developed. We reach into the communities as we start operating and building hotels. We work with schools and art programs, etc. So this community inclusion, the lifestyle, the entrepreneurship. I think this is the trend that we see for a company like us. Having said that, we are not a company that will go after just numbers, right? We want to be a meaningful company, but our brands have to create meaningful experiences.
We have time for two more quick questions, Robbert. The first one is, do you expect any, or let me rephrase that. What would be the biggest change in operations for hotels as a result of the pandemic?
There's a lot of talk about contactless, experiences, and there is certainly truth to that this would be a factor. I still stick to my guns where I say that it is all about experiences, hygiene, cleanliness, local standards in terms of safety, etc. I think across the board this will become a commodity in terms of our deliveries. How we differentiate and how we attract the business and service the business will always be through these experiences. And technology should not replace service. It should be a seamless addition to that.
Okay, final question for you is the same final question for the others. What will have the biggest influence on the hotel industry's recovery in the Asia Pacific region, and why?
I agree with all three speakers before me, but I want to add the time element to that. Because I think the biggest risk that we have is that we cannot align the crucial regions that feed each other. There will be the bubbles that will come up first, and that will be a great help to those countries that can open up to that. But as and when the other regions can align themselves, and as Alan and Peng were saying, standardizing some of the processes in terms of testing and recording and reporting, I'm afraid that that's going to take far longer than we think.
Okay. Robbert, thank you so much for being here today and sharing your thoughts with us. We greatly appreciate you taking the time.
Pleasure. Thank you.
Okay, be good and we'll see you soon. Okay, we're here in the home stretch. Next up is John Stawyskyj. He's a partner in Ashurst Real Estate Practice and international head of its hotel, tourism, and gaming practice. He's based in Sydney and specializes in commercial and property law and advises corporate clients investing in real estate interests around Asia and beyond. Good morning, John. I think it's afternoon where you are, right?
It is early afternoon, and good morning, Jeff. Good afternoon, good morning to you, and good afternoon for me. But great to be part of this event.
Well, thank you for being here. Always great to catch up with you. Let's jump right into the question at hand. What's on the top of your mind today, John?
Really, top of my mind, which has been there since the beginning of the pandemic, is helping our clients navigate not only the pandemic, but what has become a very ever-changing legal landscape to deal with the issues that are being thrown up at this time. So it's been an interesting and challenging time. We have a new swear jar outside the office that, if I use the word unprecedented, but I will contribute to it and say it has been an unprecedented time in terms of economic impact, but also reaction and legislative and legal changing landscape. So it's been an interesting time.
So you owe $2 to the jar, right? That's
I do.
I'm sure someone's keeping track there. So tell us about the legal landscape across the region. Are there any dramatic changes or things that we need to be aware of as this pandemic wears on?
Look, certainly, I think a big congratulation needs to go to the Australian government, and not being too jingoistic or patriotic here, but I think they've done an exceptional job on two fronts. One is on the front in controlling, managing, flattening the curve, and have done an exceptional job there. But the other area where they've really been active and receive high marks is looking at how to maintain the economy during this period and leading out of it. And so the legislative changes in Australia from our JobKeeper scheme, which has been a great beneficiary to the hotel industry in providing subsidised employment or subsidising the wages of employees, particularly in sectors such as hospitality. It's moves in the area of retail and commercial leasing in terms of moratorium on landlords taking action and mandating requirements for landlord and tenants to get together and negotiate outcomes that will maintain economic enterprises and moving forward. So they've all been big ticks. One that's been very interesting, that's probably, those were all A's. This is an F or maybe a WF, is there amendments to our investment regime, our foreign investment review regime, whereby they reduced the thresholds to 0. So every investment in real estate and requires a government approval process now, which would seem counterintuitive at a time when economies are struggling and slowing, that you would look to put up the barriers to foreign investment. It was a reaction to concerns of hordes of rapacious foreigners seeing opportunities at this time with industry struggling and looking to come in and capitalize on that. I think it's probably gone a little bit far. It's as an element of uncertainty because it's mandated to continue for as long as the pandemic or COVID crisis does, and that's not sure what the measurement is for that. But so there's a bit of uncertainty in that landscape, but we are assured that it will return to our foreign investment landscape when things ease, and it'll be interesting to see what that means for foreign investment, particularly in the hotel sector.
You mentioned at the beginning in your top of mind segment, you know, the importance of helping your clients through this. So what's the most common question you're getting from your clients, and how are you responding?
I think the most common question we're seeing early on did relate to the government initiatives in the job seeker area as to how they could use that to maintain their employees and their long-standing employees during this period, ensure that when the recovery comes and operations start up, that they have they're ready, their existing and trained employees ready to come back and face the public and get the industry moving again. So really a lot of work around that area, a lot of work around the government initiatives around leasing and leasing rental concessions between landlords and tenants. The hotels, and most hotels in Australia have some exposure to being landlords of retail tenancies, and depending on the size and nature of the hotel, some of that is extensive, some of it is minor, but nonetheless is an issue they need to address during this period. So navigating those two large legislative changes have been there. There have been a couple of refinancings that we've assisted clients with during this period. So clearly getting their banking financing facilities in order, and that's been a good process. I think the banks have shown a willingness to negotiate, but certainly it hasn't been straightforward or easy, but it's good to have got good outcomes for those clients and allowing them to be match ready for when we get back into the game fully.
So we've heard a lot about air travel tonight or this morning. What's your take on it? The Australia-New Zealand region is establishing the travel budget bubble, and I think Fiji might be involved, trying to get involved in that. That's a big step in the right direction for the return of global travel, isn't it?
Certainly, it's the right step, but probably a small step for the hotel industry, but hopefully a large step in the right direction for all of us. But yeah, I think there's a long way to go yet before we see free and open skies. And I think the reality of this pandemic is only sort of sinking in now with our the events even here in Victoria, our southern cousins, and everyone has one of those delinquent cousins. For us, it's Victoria that seems not to have quite got their act together, but that's only symptomatic of what happens in Beijing. The reality is that the US has a long way to go to get its house in order here, and the concern is that until the US, UK, continental Europe have addressed some of these issues, we're not going to see free and open skies for some time, and that is going to as the previous speakers have all alluded to, be the greatest drag on getting the industry back up and running. But it will happen, but I think there is still some water and time to run.
Okay, John, final question for you, and hopefully you'll have something beyond air travel, but what will have the biggest influence on the hotel industry's recovery in the Asia Pacific region, and why?
It's tangential to the air travel. I've heard all of them, I agree, certainly, and our last question and discussion was about opening up of the skies. What will have the greatest impact, and I think that this will be what will take to get fully open free skies, is going to be a vaccine, and that will also give the audience some idea of timeline for free skies, and that is not going to be around until into early next year, end of this year, early next year, and then freely available and rolled out. But whilst the numbers continue to grow globally, we're not going to see great free open skies, but it'll come. And the industry has been incredibly resilient, and it's been a pleasure and an honor to work with our clients to get them through this period.
John Stawyskyj, thank you very much for being here. I hope to see you sooner than later at HICAP ANZ in February in Sydney. We're crossing our fingers that things are better in the right direction that time.
I think we'll have a great event then, Jeff. It'll be a time for the industry to celebrate. So we hope a lot of the people on the line and throughout Asia, if they can, take the opportunity to be there.
All right, very good, John. Thank you very much. We appreciate it. Enjoy the rest of your day.
Thanks, Jeff.
Okay, we're in the final chapter here. Kevin Colket is a global hospitality industry veteran with a deep understanding and passion for hotel assets and operation. He founded HICAP in 2019, so jumped right into the fire as he launched that. Prior to founding HICAP, he spent 11 years working at Starwood Capital Group across the US, Europe, and Asia Pacific regions. Kevin, good morning to you. How are you?
Thank you. How are you? So thank you so much for having me. It's been a pleasure listening to all the other participants, and as always, excited to be part of one of your events.
Well, thank you for joining us, and you win Mr. Patience Award today for hanging on so long. We appreciate that. Well, as your reward, you get to tell us what's on the top of your mind today.
Fantastic. Listen, I think it's been really interesting listening to the speakers. We've heard all three, I think, managers and or brands, one lender and one lawyer. I think I'm going to be the first to speak about it from the equity standpoint. I think the key thing about what's happening today is we are all in this together. And I think the managers and the brands have done a great job, as much as possible, keeping employees, treating employees with empathy while also protecting their bottom line. I think lenders have generally shown restraint as we figure out what's going to happen in the future. And obviously, lawyers are giving us all great advice in terms of, how to do things, make sure that they're legally correct from all fronts. I think that the government, many governments could actually learn from the hospitality industry in terms of how people work together. I think the hospitality industry has always been an industry that's about giving hospitality, but also in terms of showing leadership, and it's really about the greater good and cooperation. That all being said, I think the equity story is a little bit more depressing. I don't see, even if demand comes fully back, which I think is going to be the case. I think it's going to take some time, but I think it's going to come back. I think ADR is going to take longer to come back. I think profitability is going to take even longer to come back. We're getting back to prior levels of profit. And then there's the question of, well, what's the cap rate? And maybe cap rates in Asia were too low before. So for me, as I'm looking at Asia today, I believe that hotels are significantly impaired, and that hasn't actually been recognized yet. I think it's important that we go back again and talk about demand. Okay, demand will come back. It will come back in layers. We're already seeing it with domestic leisure. I believe that business demand, even cross-border to business demand, is going to come back. Asia, I think, generally is less group dependent than some European and US places, but group still matters, both group tourism and group corporate business. I think it eventually will come back, although it's going to take a lot longer. But ADRs are going to be down. There's been a huge hit to global wealth. I think I read something the other day that said there's $18 trillion of global wealth that will ultimately have been wiped out. People are nervous about their jobs. They don't have the same level of disposable income. And I think at the end of the day, there is going to be demand to travel, but not at the same price as before. And I think it's going to take a while to get back to the same levels of profitability. So for me, coming in, playing offense, looking at good new business opportunities as opposed to playing defense and working with what I have, I don't believe pricing in Asia correctly reflects what it should be today.
Let's look at it from the development and transactions side of things for a moment. How are the various regions of the world ranked right now in terms of that kind of, is any region above the others in terms of transaction development activity?
I can only give you anecdotal feedback, Jeff, but what I can tell you, and I think there's a lot of lessons out of the GFC, the global financial crisis, where the US moves fastest, right? In terms of the lenders clear things off their balance sheets, they sell notes at discounts, and typically people are buying paper first at a discount, and then it takes 3, 6, 9 months for the equity to actually make its way out. I would say generally there's a lot of activity in the US, but bids are generally 20 to 50% down from pre-COVID-19 values. And there's generally a view that it's going to take 3 to 7 years to get back to prior RevPAR levels. And let's just assume that it also means profit. It can take longer or shorter depending on what we do. So I think for me, the most exciting opportunities today are in the US. Post-global financial crisis, Europe was in denial for a long time. It was hit just as bad as the US, and it ultimately took 4 or 5 years for Europe to actually work through a lot of their debt issues and their equity issues. People really just extended and were in denial, and it took until 2012 and 13 in the UK, Spain, and Italy to really actually see a lot of things recapitalized. Asia, in many ways, didn't really feel the effects of the global financial crisis, or at least not to the same degree. China had a huge and put $1 trillion or multiple $1 trillion into stimulus into the economy. That got China moving. A lot of other places that were dependent on China. You had China outbound travel. Australia hadn't had a recession, I think, in 26 years or 2 consecutive quarters of negative GDP growth. And so I think Asia really did much, much better. I think coming out of this cycle, there's a similar view. The US has done a poor job on a relative basis with COVID, and the US is a cyclical market. I think, but yet that's being reflected in pricing. I think Europe, I see the most denial of anywhere in the world, once again, where people are saying, hey, I'm not going to accept a discount. Lenders aren't going to foreclose on me. They're being friendly. And so there's no discount, but yet I think Europe probably takes the longest to recover. You don't really have a lot of growth in Europe. And I think international tourism, which has really been driving Europe, that's going to come back last, okay? Asia, I think, unconditionally does better than the US and Europe. I'm looking at sort of a 1 to a 3, maximum 4-year recovery in almost every Asia market. That being said, okay, here's what I would say about Asia. I believe that hotels in Japan, China, and Australia, more so Japan and China, were significantly overvalued based on new supply and cap rates that were too low, that weren't reflecting the risk of hospitalities. They were significantly overvalued in a pre-COVID environment. Now factor in COVID, even if it takes 2, 3, or 4 years to get back to previous levels, I think values in Japan are down 20 to 40%. It's not being reflected, but I will say it is showing up. And if you look at how the REITs are trading in Japan, they are showing these discounts, but it hasn't made its way into private transactions. So Asia has never, just to answer your question in sort of one sentence, is Asia, in my experience, in a long time, since the Asia financial crisis, hasn't had real distress and real cycles like the US and Europe have had. So the mindset is we're invincible. I don't think people are invincible from an equity standpoint. I think people are going to have to take cuts, and I think equity is going to be wiped out, and it's unfortunate, but that's the reality.
So we have time for 2 quick questions, Kevin, and I want to build on that last statement from you. How do you think distressed assets are going to be handled by lenders, particularly in Asia Pacific? Does extend and pretend concept kind of live on, or will there be a bloodbath when it comes to to distressed assets?
Yeah, I think it's really difficult to say. That's always the betting game in terms of how do I spend my time? How long does it take for fundamental value to get translated into what the equity is worth? And if the equity is in the debt, are the lenders even set up? Do they even have systems that are set up to take losses and sell things at a discount? The US and Europe have been through this. Asia hasn't been through this in a long, long time. The bottom line is, I don't know. But if I had to bet, I would bet that it's a lot more extend and pretend. And it's going to take a long time. I think lenders generally are going to be more willing to say, if something is worth 80 million now and my loan is 78 million, in order to get equity to step up and buy it, I need to sell it for 50. Even if it's a bad return and I'm not best positioned to hold this, I'd rather hold it for 5 years and get back to the 80 and not take the loss. That's my gut, what happens.
All right. Final question, about 30 seconds for this, the same one we've asked everyone else. What will have the biggest influence on the hotel industry's recovery in the Asia Pacific region, and why?
Sure, I'll give you 3 quick points, and 2 of them have already been said, and I'll expand sort of and create my own third. Number 1, lift. Okay, way more important than Europe or even largely domestic markets like the US that can essentially, that have a lot of domestic demand. Obviously, Australia and Japan have domestic demand. Maldives, Thailand, they depend more on international. Obviously, China has domestic. But whether it's domestic or international lift, it is essential for our business to get back to where we were. And by the way, here's the upside. Even though I think values are down, I do believe that values in 10 years will be higher than they were in 2019. And I think demand will be way higher than it was previously. Okay, so number 1, lift. Number 2, government policy. Okay, and that then is going to lead to number 3, and that is China and US, sort of the superpowers fighting. It's not good for anybody. Okay, I think history has shown we're better off when we get along. There's so many issues going on with China and the United States in terms of Japan now has this travel bubble, but they haven't included China in it. And is that because the US is putting pressure on Japan to not open the travel bubble with China? I mean, there's just a lot of things going on. I'm generally a belief that all people are good and our government should get out of the way and allow us to travel and go to new places. So as it relates to government holds a lot of power in the short term in terms of the 14-day quarantine, not just in terms of people coming in, but what I've heard from Chinese outbound travelers is I'm okay doing 14 days quarantine if I'm in Bali and I get to quarantine on the beach, okay, if it's not mandatory. But what I'm not okay with is having to do 14-day quarantine when I get back to Shanghai or Beijing. This stuff, once it's safe, has to go away. And I pray that governments don't try to limit international travel to keep more of it domestically longer term.
All right, Kevin, great insight. Really appreciate you being here. Hopefully, we'll see you in Hong Kong in October at HICAP. And again, thank you for your insights. Certainly appreciate you being part of the program.
Thank you so much. Always a pleasure, Jeff. Thank you.
My pleasure, Kevin. Take care.
Bye-bye.
Okay, we're going to finish up here with one last look at a couple of slides. Let me get this arranged here. And we have our final 6x8 episode next week on Wednesday, July 1st. It will focus on the Caribbean and Latin America, again, sponsored by First Finish. Firstfinish.net is where you can find out more about them. And don't forget, in October, join us for HICAP and AOCAP, both of them in Hong Kong, and we greatly appreciate anyone that can make it there. We're still moving ahead with the planning for those conferences as we speak. So again, thanks everyone for tuning in this morning. We appreciate that. Be well, be safe, and have a great day.